Ladies and gentlemen, good day and welcome to the Q4 FY24 earnings conference call of Kontor Space Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ganesh from Kirin Advisors. Thank you, and over to you, Mr. Ganesh.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Kontor Space Limited. From management team, we have Ms. Kanan Kapoor, Managing Director, Mr. Kanak Mangal, Whole-Time Director, and Mr. Tarun Gupta, Company Secretary. Now I hand over the call to Ms. Kanan Kapoor. Over to you, ma'am.
Thanks, Ganesh. Good day, everyone. I warmly welcome you all to the Kontor Space Limited conference call today. We are excited to discuss our impressive performance in H2 FY24. Before we dive into the specifics of our financial results for H2 and the entire fiscal year, I'd like to provide a comprehensive overview of our company and its recent achievements. Before I go ahead, I want to thank each and every one of you for joining us today. So as you all are aware, Kontor has been established since 2018, and now we have, post the IPO, we are a prominent player in the space where space as a service industry, offering innovative workspace solutions through our rental and management of commercial properties. We take pride in being the first co-working space company to be listed on the Indian stock market. It is a testament to our commitment to transparency, accountability, and shareholder value. Our core business revolves around acquiring and leasing properties, which then we sublease to a single or multiple clients on a per-seat basis, providing flexible and modern workspace solutions. We invest in refurbished properties to meet the unique requirements of our clients, ensuring optimal functionality and aesthetic appeal. So Kontor projects itself as a premium affordable player where we provide solutions which are pretty much in the luxury space but at affordable prices. Currently, we operate in the co-working spaces across 4 locations: Thane West, Pune, Port, and BKC in Mumbai, strategically positioned in the key CBD areas. So these locations boast a combined seating capacity of approximately 750 in Thane, 300 seats in Pune. We are running a managed office center in Port, which has 60 seats given to a single client, and we have 120 seats in BKC. All these locations are very strategically located and have great access to transportation network, which reduce commuting time and facilitating productivity for our clients. Our commitment to expansion and innovation is extremely evident in our recent acquisitions. We recently announced the 2 new centers which are upcoming. One is in Mahape in Navi Mumbai, and the other one is in Andheri East MIDC. In fact, the Mahape one is about to begin on the 1st of June, and we are very pleased to announce that we already have a 50% anchor in that property. MIDC should be functional from 15 July. So, we are pretty much in what we had committed during the IPO with these 2 centers coming up. In addition to the managed office spaces...
Sorry to interrupt, ma'am. Your voice is breaking.
Is it okay now?
Yes, ma'am. Please continue.
So, in addition to our managed spaces, we are introducing a new managed office setup in one BKC itself. So we already are running an existing center, and we have taken up a new center in the same building. This is, in fact, to cater to the existing clients as well, who are growing in terms of their requirement. So there was an internal need itself, to add more space and seats for them. So we have added that as well to our portfolio. Now let's shift to the financial performance for H224 and the full fiscal year. So Kontor has delivered strong financial results, underscoring our growth trajectory and profitability. For the second half of F2, we recorded a revenue of 6.38 crores with an impressive EBITDA of 1.89 crores, resulting in an EBITDA margin of 29.59%. And our PAT stood at 0.99 crores with a PAT margin of 15.47 with an EPS of 2.03. For the full fiscal year of FY24, Kontor Space reported a revenue of 11.03 crores with an of 3.97 crores and an EBITDA margin of 35.97. Our PAT for FY24 was 1.95 crores and the PAT margin was 17.66 with the earnings per share of 4.02. Going forward, we are actively pursuing geographical diversification, wherein we are looking to expand beyond Maharashtra and look at other cities as well, especially key business hubs like Bangalore, Hyderabad, and the NCR region. This expansion is driven by the increasing demand for co-working spaces and our commitment to enhancing our brand presence. I mean, this is something that we've had a very clear vision about, and we are moving pretty much in the same direction. With this geographical diversification, we aim to actually double our seating capacity annually, and we aim to reach 10,000 seats by FY26 to meet the evolving needs of our clients and positioning ourselves for substantial growth. In fact, post the IPO, we've got some MNCs as well who have joined us, especially at the 1 BKC center. So the fact that we got listed made us, check the boxes very positively for us on the regulatory aspect, because automatically we were very compliant and fitted every norm that was required by the company. We are intensifying our efforts to improve operational efficiencies and boost profitability. By leveraging technology and implementing enhancements, we are focused on driving efficiencies across our operations. These initiatives are essential to our growth of enhancing our market presence and capturing a significant share of the co-working space market in the near future. In fact, as we speak, we are also in the process of negotiating other places within Mumbai itself. And, hopefully we are looking forward to breaking some positive news soon on those lines. In addition to this, our customer satisfaction remains our top priority. That is something that we've always been focused on, and we take pride in saying that our oldest customer has been with us from the time the company started, and he stuck around, and in fact today he's also the largest customer for us and continues to stay and is very happy as well. In that sense, we continue delivering exceptional value and fostering long-lasting relationships. As the first co-working space company to be listed on the Indian stock market, Kontor continues to lead and innovate in the dynamic co-working industry. Before we dive into the question and answer session, I want to express my sincere gratitude to all our shareholders for being an integral part of our growth and journey. Your support and involvement have played a crucial role in our success, and we genuinely appreciate your valuable contribution. With this, I would like to open the floor for question and answers. Thank you once again for your presence and continued support. Appreciate it.
Thank you very much, ma'am. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and then one to ask questions. The first question is from the line of Yashwanti from Koji Finvest. Please go ahead.
Yeah, thank you. Good morning, everyone. So, ma'am, just wanted to understand that your EBITDA margin was around 43% in FY23, which has come down to 36% in FY24. So, what has contributed to a degrowth in the EBITDA margin?
So the new center that we started in BKC, so generally the turnaround time is about 3 to 4 months to fill up a center, when we don't have an anchor client in place. And this was the absolute speculative inventory that we took up. So it took about 3 months for it to fill up. And that rent outflow is something which has, affected the EBITDA. But this is something that will now reflect in the H1 numbers for this year, because that will be an additional thing that will be added.
Okay, so
in fact, that number is exactly equal to the rent that was paid. The difference in the EBITDA. So we will now be seeing the benefit of that in the current year.
Okay, so as on date, what is the occupancy rate over there?
It's 100% occupied.
It's 100% occupied. Okay, and then we can see this margin reaching to around 40% plus for the current year, right?
Definitely. It will come back to, what it was prior, because so also there will be an addition of the fort, the other new centers. In fact, Mahape also will start from 1st June. So there'll be 4 months of income coming in, because there we already have a 50% anchor in place. And then July 15th, we also have the MIDC center. So all those numbers will be reflecting in H1 of FY25.
Okay. So like H2, we are seeing the 40% growth in your top line. So what kind of a growth you can see for FY25 for the top line business, that is the revenue business? When you see there are 3 facilities coming on a board.
See, personally, I would really like to see the top line doubling up, because that's the way I see it growing.
Okay. And you mentioned in your opening remarks we have the 3 currently operating facilities in Mumbai. One is 3 in Mumbai, one is Thane, and one is Pune. So can you please help us understanding what is the rate differential or what is the average rate per month we can please get it from these 3 different localities?
Hello, ma'am. So
Yeah.
this is Karan Gupta. So I would like to continue with this question. So the question, because we can't take out an average for this, because the 3 properties we have rented is in the different parts of the Mumbai. So we have the different rates over there. So, and the capacity also are totally different. Means one is at 700, more than 700 seater, one is at 60 to 80 seater, plus one is at 100 to 120 seater. So there is no leveraging out or something averaging out, I would say, regarding this.
Average of the 3 properties. I'm asking you what is the individual rate at 3 properties, if you can guide us.
Okay, so the individual rates varies from, means if we can expect from it is anywhere around 10 to 15,000 per seat. Plus if we can go to the port side, that is also something around, sorry. So if we can go something around in the port center, so it is given to a managed client. So it is around 8 to 9,000 plus this 8 to 9 lakh, sorry. And if we can come around this BKC being a premium center, and so we can get something around 45,000 per seat.
And this is per month rate per seat, right?
Yeah.
Okay. So you also mentioned somewhere one of your address to the investors that you wanted to enhance your capacity from around 2,500 seats currently to around 5,000 seats going forward. So what is the timeline to expand this to double the capacity, and what kind of a capex you would be requiring? And thirdly, which location you will be targeting?
So, this, firstly, I would, in this line, we have started working. So for MIDC Center and Andheri Center, we have already taken for and will be operational from June and July respectively. So in this financial year 25, we will be doubling our capacity to 5,000 seats, and in the next financial year, we are targeting to again double our capacity. So we are targeting the prominent corporate hubs where we can have the anchor client in place, so that the capex would not be required.
I'll take it from here. So the capex would be in the range of anywhere between 3,000 to 4,000 per square foot, depending on which area, which center, what kind of interior solutions we choose to take.
Okay.
So basically, if you are looking to add another 1 lakh square feet, subsequently we can look at about 30 to 40 crores of capex.
30 to 40 crores. Okay.
Right.
Ma'am, I just want to understand your bookkeeping perspective. What is the major cost component and how much is
Sorry?
the percent? What is the major cost component?
The major cost component is the rent.
Sorry? Rent.
The rent. The rent that we pay, that is the major cost component.
Okay. And whenever you lend this properties, normally how is the agreement? Is it for the year, for the 2 years, or 5 years?
Ms. Yashwanti, your voice is not clear, ma'am. I would request you to speak a little bit louder.
Can you hear me now?
Yes, please continue.
Yeah. So, ma'am, just wanted to understand when you entered into this contract, this leasing contract with anybody for lending your properties on the rent, this contract is normally what is the period? Whether it is a periodic contract for a year or more than a year, or it is for a short term?
No. So we get into long-term lease rental contracts because, that is in interest of the business. So anywhere to the north of 5 years and, with a minimum lock-in of 3 years, that is the kind of agreements that we get into.
Okay. And WeWork is also expanding its co-working space very aggressively, especially what we can see in Mumbai. So what you would like to say as WeWork as your competitor, and what strategies you would have to expand and your presence as well as your brand in the market?
Sorry, Yashwanti, right?
Yeah.
So Yashwanti, we like to set benchmark, where we are concerned, where we do better than what we did yesterday. Today we do better than what we did yesterday. I mean, it would not be fair for me to say XYZ is my competition or ABC is my competition, because our positioning is very different. The way, our growth, the plans, everything is with a lot of firm footing. We would rather work in a systematic and a consistent manner where, we have a consistent growth instead of spreading ourselves too thin, having multiple centers everywhere, over-leveraging ourselves. So we are not looking at that kind of an approach at all. So, the way we run the business is very conservative. We are very risk-averse. And going forward, we, are adding one more thing to the strategy, that whenever we start a center, we would definitely start one where we have an anchor of 50% to avoid the cash burn. So I mean, because we saw what happened to the EBITDA margin with one BKC, where it took us, a good 3 to 4 months to completely fill up. So that is something which has made us change the approach, and we would definitely be expanding with an anchor in place. So, I mean, like I said, I would not like to compare us with anybody else. I mean, everybody has their own way of working, their own processes, their own, plan going forward. So for us, sticking to our plan, focusing on our growth is something which is far more important.
And last one bookkeeping question. You said that rent paid is the major cost. Normally, how much as a percentage to sales it accounts to?
Sorry?
You mentioned that the rent paid is your major cost. Normally, what is the percentage of the revenue it accounts for?
Well, the rent paid is maybe about 40 to 50% of the revenue.
Okay. Thank you so much. That's all from my side. And wish you the best.
Thank you.
Thank you. We'll take the next question from the line of Sahil Sharma from Columbus Capital. Please go ahead. Mr. Sharma, I have unmuted your line. Kindly proceed. As the current participant is not answering, we will move on to the next question, which is from the line of Jignesh Vaida from Jiva Capital. Please go ahead.
Yes. I wanted to understand, the two new centers that you are starting.
Yeah.
It will also take 3 to 4 months to refill totally, be occupied. So I think from H2, your 100% utilization can be expected?
Definitely. In fact, like I said, so the Mahape Center, we already have a 50% anchor in place.
Okay.
So which means on day one, we'll be at 50% occupancy. And we have already started marketing the property. So there has been a lot of interest coming in, and we look to fill up the place, in fact, sooner than the other centers. And as far as MIDC is also concerned, I mean, we are definitely, there are anchors over there as well. So the cash burn will be relatively lower.
We have an anchor in the properties that the strategy that you are following. So our realization would be 10 to 20% lower if we market our properties and refill ourselves. Is that the way to think about this business?
No. In fact, our realization would increase from day one. See, what happens is if we take up speculative inventory, we are looking at taking up a premise which is absolutely empty, right? And that is something that takes more time to fill up, as opposed to having a facility where there is an anchor who's already occupying 40 to 50% from day one. So our realization goes up.
No, I'm talking of a long term. Suppose after 6 months you fill up with your own marketing, and rather than taking an anchor for the next 4 to 5 years, your realization would be better if you don't have an anchor, because anchor being he will occupy a large position, so he will pay, I think, lesser than single or double seats that you would market.
No, so there would definitely be a mix. I mean, see, the math at the end of the day is something that won't get affected, because even if an anchor would be coming in at a better price, maybe slightly lesser than the others, it would get averaged out with the other people coming in.
Right. Yeah, generally, what is the pricing at which the anchor is offered seat? Around 15-20% lower?
Not really. I think it would be maybe 5 to 7% lower.
Okay. And the other thing, out of the total debt, I think it's around 5 crores.
Yeah.
So, where we have used the debt exactly? For our premises or?
Correct. So, it's for a premise and for a vehicle.
For a premise?
So one of them is for our own, one of the properties which, we have given to the managed office client. That is something which is owned by Kontor, and that is the loan that is there, and then there's a vehicle loan. That's about it.
Oh, okay. Okay. So, all others, we are renting it out.
Absolutely. I mean, the intention is to work on an asset-light model.
Right. And now coming to your cash flow, this last year, your cash flow from operations was around 4 crores, 3.5 crores, and this year it has come down to 30 lakhs. So where the money is stuck exactly, if you can make us understand?
Kanan ma'am.
Sorry, can you repeat that question again?
Yeah. So, I am seeing the cash flow from cash flow, and in that, the cash flow from operations last year was around 3.45 cash generated from business activities. 3 crores, 44 lakhs.
Correct.
Understood. This year, 31 lakhs, 68,000. So where exactly, the cash is going?
So there's a corporate loan that we've given out, and that is where because keeping funds idle is something which just doesn't make sense. So we have given a corporate loan, which is actually an interest yielding loan. And that is where even our other income comes from.
No, I'm talking of cash flow from business activities. The loan component will be below it. Okay. So only from business activities where it has the money is stuck or something, I want to understand.
Sir, actually the money is not stuck anywhere, but the issue expenses are there, plus the increase in the company's management, the salaries increase.
We've actually had a considerable number of staff also that we've added.
Okay.
I mean, because the team has also expanded.
Okay. No, there is one heading, changes in other non-current assets other than non-cash expenses. That is 3.67 crores. So what is it exactly wanted to understand in your cash flow?
Just a minute, sir. Just a minute.
Yeah.
So basically, these have gone towards the deposits of the new premises.
Oh, okay. Okay.
Yeah.
For MAPE and
MIDC Andheri. And also, of course, also BKC, the new center that we have taken in one BKC.
Okay, understood.
So currently in BKC now we have 2 centers.
Correct. And going forward, which other areas you are looking to cover? It will, apart from Mumbai, or in Mumbai only you would like to?
No. I mean, definitely we are looking at other micro markets in Mumbai, but at the same time we're looking very aggressively in Hyderabad, Bangalore, NCR, and also cities like Ahmedabad.
Okay. Right. Okay, all the best. Thank you.
Thank you so much.
Thank you. We'll take the next question from the line of Sahil Sharma from Columbus Capital. Please go ahead.
Can you hear me?
Yes, sir. I would request all the participants to kindly use your handsets so that we may get optimum audio quality in this conference. Thank you. You may please proceed.
Yes. So actually, ma'am, what I was asking is this capex of 30 to 40 crore that you talked about. How do we plan to fund it?
So we still have proceeds from the IPO. That is something that will go towards expansion, and then we are looking at internal accruals, and the promoters will also put in more money into the company.
Ma'am, like the gentleman before me pointed out that if we are having to pay so much of the money from cash flow for taking like the center, then basically we will not be able to generate cash flows to be used for.
So see, we have to obviously pay the deposit before we start the center as well, right? But once we have people who have come on board, they will also be giving us a deposit. So that will take care of it.
Okay. So is it the case that the deposits we get from our renters would roughly offset what we are giving to our landlord?
Absolutely. Pretty much. I mean, in some cases, where we are, so we also try that wherever if there's a landlord where he's asked for a 6-month deposit, we try and, ask the client also for 6 months, but in most cases, people are comfortable with 3 months. So that is something, that part we end up taking a hit, but more or less in most of the places, even the landlord takes a 3-month rent as a deposit.
Got it, ma'am. And one question on you also mentioned that depending on the type of interior solution we have, the capex can be 3,000 to 4,000 per square foot. In this, ma'am, basically this interiors, we are using some kind of vendors, or do we have an in-house team? And can you just talk about our own employee strength, how many employees we have and what are their capabilities?
So we get our own contractors because we are able to optimize in terms of the pricing and quality when we are personally getting things done rather than outsourcing it. So as far as possible, we get involved in the whole process ourselves. And in terms of employee strength, so we have a sales team of about 12 people. And we have a finance team, which includes accounts and, finance and our CS, which is about 6 people. And then, of course, it's us in the management.
Right. Sir, actually, you mentioned the team for execution, basically contractors. I was specifically interested in that one, like the project execution or the one that is doing this interior. Do we have employees or those are mostly on contract?
Those are not employees. Those are all contractors.
Got it. Ma'am, if we look at the industry itself is growing pretty fast, this managed spaces kind of industry. It's growing at some 40-50%. And the interesting thing is that this is despite the fact that, if these renters were to directly take the space on rent and do the interior themselves, the center might even be cheaper that way. So just wanted to understand from your perspective, what is driving these people to come to manage service providers like us, rather than directly going to the landlord?
See, what happens is, for any company, if they take on a center, they have to infuse that much capex. So one other issue is that in many of the premises, people want to have an office, but the floor plate is very large.
Right.
So, for example, if it's a 15 or 20,000 square foot size of an office and somebody just wants to rent out 1,000 or 2,000 square foot, no landlord is going to give it to them directly. And that's the reason why co-working spaces, have become more and more popular, because generally a lot of the prime commercial real estate landlords and developers are creating larger offices, but everybody wants to have a piece of the cake. And the only way that it's possible for them to have that cake is, to go through a co-working space or a managed office. Because it's a lot easier for, let's say, a company that is looking for 10,000 square feet of office space in a floor plan which has 30,000 square feet. And even though it may be a large company, and this I'm saying because, we have encountered these things. They can't take on the 30,000 because that is not the requirement, but they still want to be at that address. So somebody like us will come in, we'll take up 30,000 and we can bifurcate 10,000 for them, then for somebody else and for somebody else. Or, maybe just give them 10,000 and convert the balance into co-working.
Understood, ma'am. Ma'am, my last question is that can you just once recall which are the different places where we have our centers today, and roughly what is the range of the rate at which we are giving it out in that place? Like the rate at which we are giving it out?
Yeah. So we have our largest centers in Thane. There the rate is anywhere between 10 to 15,000 per seat. Then we have a managed office in Fort where it's 8 to 9,000 per seat. There's a lump sum amount that comes in from there, about 9 lakh rupees per month, since that's a managed office. And then in one BKC where we have two centers, the rate is approximately 40,000 per seat. Pune is in the range of 7 to 9,000 rupees per seat.
Thank you, ma'am. All the best.
Thank you so much. Thanks, Kyle.
Thank you. The next question is from the line of Neil Behel from Nadrin Capital. Please go ahead.
Hi, ma'am. This is Neil Behel. Just wanted to understand the debt on the books you said is 5 crores. Am I right?
That's right.
So, how do you plan to expand? I know there'll be equity requirement, but there'll also be a lot of debt requirement. So, the debt that you take, is it in the form of fit-out financing, whereby you go for these NBFCs who do fit-out financing, or else the landlord does the fit-out financing and then you add it in the rental cost for yourself, which is paid over, let's say, 3 to 5 years?
Right. So currently, Neil, we haven't taken any fit-out financing. We have been using the IPO proceeds and internal accruals for expansion. But going forward, definitely we have had discussions with NBFCs because, we would like to keep those options open.
Right.
Once we do
that does seem to be the more asset-light way.
Absolutely. So once we go, we already have had some firm discussions around it with the larger NBFCs, and in fact, even the pricing is very, very attractive. So it definitely makes sense, and that is something which is on the cards.
Right. Okay. So that would be the way for you to do it. All right. Also, I wanted to understand FY24, you reported 11 crores of revenue. In that, you said you had 4 centers active, right?
Yeah.
How much square foot in terms of percentage was not contributing to revenue then, who was actually set up but not contributing to revenue in this FY24?
So see, in terms of square footage, it may not be that much, but because PKC is such a prime area, the price it commands is something which is much higher than all the other places. And I think it would be difficult to kind of really pinpoint.
Right. No problem. Also, as one of the participants said that the industry is growing very fast, and we've also kind of validated that the industry is growing very fast. You said that you want to go from 2,500 seats to 5,000 to 10,000, and probably I think the growth should continue even beyond that. Is there a thing in your mind that you are saying that, okay, I'll grow from 2,500 to 5,000 because you want to maintain your margins, or you don't think the opportunity is there to go from 2,500 to 10,000 directly this year?
Because I would rather under-commit and over-deliver.
Right. Because the opportunity may be there to go from 2,500 to 25,000.
Absolutely. I mean, the way I see it, it could maybe be just straight away 2,500 to 10,000 seats in 1 year. But it wouldn't be fair for me to, commit to something. I would rather just act and work and do it.
Right. No, so I just wanted to have a sense for my own understanding that if a company wanted to do it, it was very much on the cards.
Absolutely. 100%.
Exactly. Yeah. So that's the feedback even I've got on the industry. That's why.
No, it's absolutely on the cards, and it's also, something which is on the action.
Okay, fine. One last question I had that, some fleeting comments I heard from the previous questions, which I had taken a note of. So I guess it's around corporate governance, if you don't mind answering. You said you have given a corporate loan to somebody. Who's this entity that you've given loan to? Is it a related party entity?
So sir, this is CS. So I would like to answer this question. So basically, this on the related parties to whom we have given the loan, we have done our due diligence to the party for the parties before giving the loan. So there is no related parties involved in the transaction.
But then, why are we entering the business of lending? Why can't we just put it in some liquid mutual funds and
no, sir. So that is the issue. We can't keep that much amount in the liquid and nothing from. So that is better for our business only.
I mean, the moment we see it, opportunity will be, getting the money on call and then deploying it in the business. That is something that is absolutely, we are very eager to do that.
So may I know
it's just that, like I mentioned earlier, after experiencing what happened in one BKC, where it took us, it does take 3 to 4 months if you take up a later entry. That's the kind of cash burn that happens, because by the time you fill up the place, those are the timelines, but you still are obligated to pay the rent. And which is why, we want to have an anchor in place going forward for any of the properties. And God has been kind, things are moving in that direction.
I understand. I understand everything around the business side, but this giving out corporate loans, what if the money doesn't come back? What if that person defaults?
So, sir, we have done our proper due diligence. We are not giving to anyone.
Yeah, plus it's collateralized.
Right. So, going forward, is this going to be a thing that as your fees increase?
No, not at all. In fact, this is just a one-off thing. I don't think going forward something like this would happen. Because with the kind of pipeline that is there, we would need every single rupee in the growth and more.
Right. Don't mind me asking the next question. It can come across as not very in good taste, but I'm just asking generally. There's a vehicle loan also, because sometimes, we see that some companies, the vehicle loans are like exorbitant amounts. There's a Rolls Royce on the company's payroll. Like what is the amount on this vehicle loan?
It's about 60 lakh rupees.
Okay, fine. That's more of a. And what is the hike in the salaries for management that you have taken this year?
So to be honest, there's no hike. I mean, we all are pretty much, focused on creating the company, on the growth of the company, and we don't want to add that burden on the balance sheet and the cash flows until, the P&L, until we reach a certain stage.
No, I just, one of the question around cash flow was, and you had mentioned that the salaries have been increased.
No,
So I
we
just
have
wanted to know the quantum.
we have added more people. We have gotten somebody senior for sales, and we have added more junior people on the sales team. And that is something which is
On that side. Okay. It's not that the existing management has.
No. There's no increment. Zero increment.
Basically, it is the number of employees has risen a bit.
True. Absolutely.
Okay. And my last question, sorry. This kind of a business has very little of headquarter cost, right? May I know what kind of headquarter cost do you have currently?
Headquarter cost.
I mean, a center may have a center level profitability, but you also have a sales team and XYZ team sitting somewhere else managing all of this.
Right.
So what cost as a percentage of
In fact,
cost is the headquarters cost?
I'll tell you, the sales staff sit out of each center. It's not like there's any major headquarter cost. So the staff is bifurcated. I mean, every center has, some of the salespeople sitting there. And I personally keep moving around.
Right. So your salespeople sit in these centers itself.
Correct.
And the tenants are okay with this.
No, absolutely, because they don't sit with them, right?
No, I mean some space nearby, whatever.
No. There's like a small queue, which is the difference.
Understood.
And, co-working in general has a lot of common areas, and the whole idea is everybody's working together, doing their own thing at the same time.
Understood. I mean, this is all from me. Thank you. I mean, I think you've done a great job so far.
Thank you so much. Appreciate it. Thank you so much. Thanks.
Thank you. We'll take the next question from the line of Varun Pinto from Negen Capital. Please go ahead.
Hello. Hi. Am I audible?
Yes, sir. I would request you to kindly use your handset if you're on your headphones.
Is this better?
Yes, sir. Please continue.
So I just wanted some clarification. So this totaling our seats in Thane, Pune, Fort and BKC, we have somewhere around 1,200 seats, right? So these 1,200 seats is what was generating the 11 crores top line we did in FY24, correct?
That's right.
So the 2,400 seats that we are going to be doing, that is going to come online post the Andheri MIDC center comes online.
Correct.
So when we extrapolate the FY25 revenue to be somewhere around, like double of our FY24 revenue?
Yes, 100%.
Okay. And our EBITDA margins would go back to somewhere around 40%, right? Since we don't have...
Yes, they will.
Right. Okay. Right, ma'am. And when we open a new center, ma'am, like at what occupancy do we usually break even?
So generally we break even at about 60-65%.
60-65%. And we have about a 50% occupancy at the Mahape center, right?
That's right.
And our Andheri anchor, what kind of occupancy would that give us?
See, it's very early for me to, say something about that.
Okay. Also, ma'am, at the time of the IPO, you said that you guys are also looking for a space near Airoli. So is this Mahape center the same center?
Yeah, it's close by. It's in the vicinity. This is Mahape is also in Navi Mumbai.
Airoli, right?
Yeah, this is close to that.
Okay. I think that's it from my side. Thank you, ma'am.
Thank you.
Thank you. The next question is from the line of Kaustav Datta, an individual investor. Please go ahead.
Yeah. Am I audible?
Yes, sir, you're audible. Please proceed.
Thanks a lot. All right. My question is, again, sorry to bother you again, Kanan and Kanak, on the loan, the intercorporate loan that you had given. So if I see the balance sheet, I think non-current assets of about 430 lakhs, that is towards lease deposits. And I'm assuming this is a short-term one, right? 492.52. This includes your intercorporate loan.
Absolutely. Absolutely short.
Since it is eye-catching and so many of us have already asked this question, when do you think this will get out of the way? When do you think you'll get the money back as per contract?
This definitely won't be there on the 25 balance sheet.
Sorry? It'll be out in the 25 balance sheet. Okay.
Absolutely. Absolutely.
Got it. My next question is on, not too sure whether you've explored it because I was reading an IPO document of your competitor about a managed aggregation model where you go for revenue share with the landlord. So do you think that you can see that happening because it reduces your lease rental?
Definitely. As we speak, we are in talks for this particular model.
Okay, great. That's
definitely.
Great. All right. And can you give me a rough sense of your blended utilization across centers for FY24 and how much do you expect to perform in 25? Blended utilization.
Blended utilization, in terms of our capacity utilization?
That's correct. Yeah.
So I think, blended utilization would be to the north of 85% across centers.
Okay, great.
We are looking at 85 to 90% of it going forward.
All right. Got it. And 7.5 crores that you have end of the year in terms of cash and cash equivalents, do you think that's good enough an amount for your expansion across to other cities? Is that a fair comment?
Definitely. See, like I said, once it does reach that stage, we will definitely look at, the interior financing, the fit-out financing. That is something which is on the cards. And, the deposit, again, I said, whenever we give a deposit, we also get a deposit. It's just that there's a little bit lag of time, but that is something that even the promoters would bridge the gap.
All right. And Kanan, I think you mentioned about, your voice was muffled during that time when you were giving the seat projections. And did you mention 14,000 for FY27? Is that correct?
No. I mentioned 10,000 for FY26.
Okay.
Although that's conservative, but, just rather be fair. Like I even said to the previous investor that we would rather, under-commit and over-deliver.
All right. Got it. And my last question is more from an industry perspective, understanding the co-working space. And I was just thinking of, maybe down the line, the landlords, providers of space, basically. Do you think that they would aggressively get into co-working space instead of having, people like Kontor or Office or WeWork? Can it at any time disrupt that particular industry? Because real estate are the providers of space and they are kind of kings in this field. And my question to you is kind of attempted to answer that in your previous, remark. But I just wanted to get a sense more from you. Do you see that happening? And in a way, what is the skill set that you kind of give that the real estate can't, or the real estate landlord can't?
Happy to answer your question. I've interacted with several landlords so far. And, every landlord or every property owner is only in it for, the rent and for the upside on the property. They're not in it to run, a co-working space. That is not their core business. Their core business is just real estate.
All right. No, I'm just thinking from a common sense angle, right?
No, absolutely. See, anything can happen. One really can't, discount the fact that anything can happen. But will it happen or not again is something that I really can't commit to, right?
All right.
Although with I can only talk about my experience now and, my interactions with a lot of developers who own properties, a lot of, individual investors who own properties. Their focus is real estate. They are not in it for the operations. And
I have seen Brigade and people like that at I'm based out of Bangalore, so I've seen people in Bangalore getting into that zone. Like Brigade, they've floated a subsidiary. So my question is, if you're comfortable speaking with your landlords, it's fine. I mean, they don't want to get into business, that's fine. My question is because you're industry expert. I just wanted to...
No, absolutely. But see, this is a very relative thing, right? It's something which is extremely relative. One can't generalize.
Okay, fine. But you feel that they would concentrate on their core rather than getting into anything else like a co-working.
Absolutely.
Okay, fine. All right, thanks. That's all from my side. Thanks, Kanan. All the best.
Thank you.
Thank you, ma'am. The next question is from the line of Simmer, an individual investor. Please go ahead.
Yeah, hi. Good afternoon, everyone. Thank you for taking up my question. So, ma'am, I have just one question in regards to your payback period. What does it look like in the tier 1 city that you're operating right now in Mumbai? And when you talked about your expansion in other cities like Hyderabad, Bangalore, Ahmedabad, what model have you created where your payback period is lesser than the one that you have currently in Mumbai?
So I think the fact that we are trying our level best to take up spaces where we have an anchor client, but that totally cuts the payback period shorter. So I mean, I don't know if that really answers your question.
What is it right now? How many months is it right now in Mumbai?
So if you start a new center with speculative inventory, it can take anywhere between 2 to 4 months.
I'm sorry, can you repeat that again?
So if you take on a premise where there's, no client, a speculative inventory, if you take on a premise which is absolutely vacant 100%, it could take anywhere between 2 to 4 months to fill up the space.
Okay. And when you talk about your long-term contracts, wherein your lock-in period is around 3 years with a 5-year contract, what sort of clients are you catering to? Can you just give me some insights about your clients, whether they are SME clients or startup clients?
So we have a mix of SME, startups, IT companies, financial services companies, multinationals. There's a BPO as well. So it's a mix.
Got it.
And more or less everybody's also there generally for like a 2 to 3 year kind of lease.
Got it. Would you mind if you could share that on the presentation the next time when you arrange a con call?
Absolutely. Happy to do that. We'll take a note of that.
Thanks. Yes. Thanks, ma'am, and all the best going forward.
Thank you.
Thank you. Ma'am, there is one more participant. Can we take him?
Yeah, sure.
Okay. Ladies and gentlemen, this will be the last question for today, which is from the line of Ankur Gulati, an individual investor. Please go ahead.
Hi, Kanan. What is CapEx per seat guidance?
Hello?
What is the CapEx per seat on average?
Sorry,
Your voice is breaking.
What is the CapEx per seat on average, especially for the new upcoming centers?
So the CapEx per seat, let me just...
Mr. Gulati, I would request you to mute your line, sir.
The CapEx per seat would be about, roughly about 90,000, 80 to 90,000.
Got it. And the 3 new centers which are coming up, there you don't have any revenue share with the landlords, right? It's a straight lease model which you have done.
No revenue share.
Perfect. Okay. All right. Thanks.
Just pure vanilla lease.
Thank you, ma'am. Ladies and gentlemen, as that was the last question for today, I would now hand the conference over to Mr. Ganesh for closing comments. Over to you, sir.
Thank you everyone for joining the conference call of Kontor Space Limited. If you have any queries, you can write us at info@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you. Thank you very much. Thank you so much. Thank you, everyone.
Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Kirin Advisors, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.